Yo, Marcus Gerber here. In this video, I'm talking about a stock that I'm invested in and why I'm invested in it. And this stock is CenturyLink. All right, let's look into this. And before we jump into this video, don't forget to put a smash down on that like button. It really helps this channel, helps other folks also view this content. And if you haven't already, don't forget to hit that subscribe button. I really appreciate it. Thank you so much. Okay, now, so why am I invested in CenturyLink? So CenturyLink is a stock that has a high dividend yield. And it had an even higher dividend yield before until they had a dividend cut. And so dividend cut is kind of a red flag for a lot of people for very good reasons. But also it's a necessary thing if a company, it's not sustainable for a company. And there's also a turnaround point of when the company might start to be able to grow again. But when does that happen? And should we even trust companies and give them a second chance? So as someone who is definitely a value investor at times, I love when stocks crash and I look for good deals and I analyze the risk and reward for that stock. CenturyLink is definitely a stock that is on the riskier side, I must say, especially from a trend and what has happened historically for that stock. But let's take a look at the charts and why I might have jumped into this stock and where I bought into this stock. So let's look over here. So this chart, this is CenturyLink right here. And this, to get a little bit of perspective here of what CenturyLink looks like, I'm going to change, this is the interval of a day. I'm going to go for a week here, just so we can zoom out a bit and see what has happened in the history of this stock. So CenturyLink in 1997 was in this range of $13, $14. Before that, actually, it went all the way down to about $10 over here. And you can see before that, this is where the stock began. So we see that we had a huge period of consolidation after it had this massive run up, and then finally it went all the way back down. And this is, kind of like a bubble, basically, at least the formation here. And so I'm definitely interested in when stocks hit, the base of where that bubble started. So if we look at CenturyLink here, I guess this point here was around $12. I guess it was a little bit lower than this point here. So it didn't quite make it to this low. So it went up and then went down again. And now this low of $10 per share, it coincides with the low that we saw down here for also around $10 a share. So that alone on a technical standpoint makes me a little bit interested in CenturyLink. And as you can see here, this stock has been taking a beating. And now the question is, when will this stock turn around? When will it stop going down and when will it start going up? Well, I'm not sure exactly when that's going to happen, of course, but what I can say is that when they had a cut in their dividend, their stock quickly went down and hit this $10 mark and bounced up pretty soon after that. So when did I jump into the stock? When was the risk worth it for me? So I knew about this company for a long time, but I recently heard about this stock maybe a little over a year ago on CNBC. I know, but anyway, on CNBC, they were talking about how one of the analysts really believed in this stock and the long-term prospects of this stock on its growth story. And so that got me interested. I looked into it. The levels where I saw it when I heard about this stock from the analysis, it was still not in the range that I wanted to buy. Also, from a technical perspective, it still wasn't something that I could feel like I could even jump into. But the valuation and also the long-term prospects of this company, and I believe in this company a lot, and the fact that the dividend cut already happened, and so there doesn't seem like there's a lot more surprises left, which is a good thing. Everything is kind of baked in a little bit now. I can kind of see what's kind of happening and where this might play out more. So that kind of helped me understand what to expect now. And because that would be a little bit tough if I jumped in this company and then there was a dividend cut, then would I just leave this company? I'd have to figure that out on the spot there. So it's kind of nice that this already happened before I became an investor of this company. So when I saw this dip down here to this $10 level, and again, I am also a wanted to look at charts and a technical analysis, I saw that this was a very nice level here to potentially jump in myself. And this was a very significant level. So where did I jump in exactly? So when I saw that we finally hit that $10 level, that's when I started to be more interested in this stock, because this is an area on a technical perspective where we also hit $10 around here. And this is about the baseline of this bubble here, potentially. And so I think that we're finally going to hit some consolidation. And this is why I jumped in at $10.50 a share pretty soon after that. And every time that the stock went down, I bought in more. I bought in more here. And then most recently, I bought in more at this $12 to $13 range here. And so this is something that I keep buying into, but this is something that I'm also very much paying attention to, because if we go into the day perspective here, so if we draw this line here, we can see that we had support, 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 and then after we broke this line of support here, it started to act as resistance, and then we crashed below this line. So this is something that I'm definitely paying attention to here, and this is why I have this line set on these points instead of looking at these points here, because of what has happened in the last time we broke through. And a very significant point that we're going to converge on in the near future is this downtrend line here that we've been obeying ever since, went a little too far there, ever since 2014, we have been following this downtrend line. So if we can break out of this line here, and this would be currently around 16, 17 bucks, it looks like. I think we're going to be going into this pattern here and converging in on this point for the next few months until we finally break out of it to the upside, or we break out of it to the downside. And if we break out of the downside, it doesn't mean that we're going to go necessarily too much below $9 necessarily. We could, of course, but if we go to the upside, I think that we will be able to consolidate, and this line here would most likely hold in the future. So we'll see how that plays out. I'm very interested to follow this chart here, and as long as it goes down near this line, this is where I will buy again. But if we are looking at this pattern that has happened in the past here, this is where we had a breakdown. It went through on this next attempt here, which would be this next attempt down. So this is a kind of a scary stock pattern. We have a high dividend yield, and there's a lot of risk with this stock, but I have a lot of optimism with this company and the fundamentals and the assets that they have within the fiber optic space. And I think CenturyLink is going to be here to stay. That's my personal opinion here. It's not financial advice. This is a stock that I admit that is more risky. It has a lot more debt, yet it has a significant amount of assets. And let me know if you own CenturyLink or think it's an interesting stock, or definitely try to stay away from CenturyLink. I'd be interested to know in the comments below. And thanks so much for watching, and I'll see you guys next time.